Hey, what's going on, everyone, and welcome back to this week's video. My name is Vijay Patel, and I am your 1099 tax coach. This week's video covers one of the most frequently asked questions by my clients, and that is, I bought a new vehicle. Can I get to claim the depreciation in my business? So we will go over the laws, the requirements, and also what you need to do as far as maintaining the records go to substantiate that deduction, should there ever be any need for that. So before we dive in, though, I wanna go over a couple of things. One is although I'm a CPA, I am not your CPA, and I am not aware of your personal tax situation. So these videos are only for educational purposes only, and they are not specific tax advice. And second thing is, before we move on, I would request that everyone watching this video, please go ahead and subscribe to my channel, so that you get updated on future videos in this series. So with that out of the way, let's dive in. Now, first thing first, let's go over the requirement in order for you to be able to claim that deduction for that vehicle that you bought for your business. I got 4 points outlined on the screen, and we'll go over each one of them. The first one is pretty obvious, is that you have to own the vehicle. If your business is incorporated as an S corporation or a C corporation, then obviously the vehicle has to be titled under the business's name. But if you are a single member LLC, or if you are a sole proprietor, then obviously the vehicle has to be under your name. The second requirement is that the vehicle has to have a real business purpose, meaning you have to use the vehicle for business related purposes. You cannot use it for personal errands and chores and any other personal usage. That will nullify the deduction for your business. The third thing, again, this one is pretty obvious too, is that if you want to claim the deduction for 2026, then vehicle has to be placed in service in 2026. If you order the vehicle in, let's say, on December 28th, but the vehicle actually does not leave the lot until the first week of January, then that would become a 2027 deduction, because the vehicle itself was not actually placed in service per se, or did not get used in the business until January of 2027. So again, the vehicle has to be placed in service during the current tax year. And then fourth point is you have to track the business usage percentage. And this is determined by the total miles you drive for the year versus the miles driven for the business. For example, if you drove a total of 10,000 miles during the year, out of those 10,000, 8,000 miles were for business related purposes. That means you use the vehicle 80% of the time for business, and you are entitled to write off 80% of the cost of the vehicle. So I hope these 4 points make sense. Now let's go over the kind of second component to the question, and that is, if you are able to claim the depreciation for the business, can you claim 100% of that in the current year, or do you have to prorate over a period of years? So let's look at the requirements for what would qualify the vehicle for the 100% deduction right away. The first requirement is that the vehicle has to be at least 50% used for the business. So in the previous slide, we covered that your total miles driven versus the total miles driven for the business, that ratio determines the business use percentage. This percentage has to be at least 50% in order for you to even be able to claim the entire depreciation in the current year. There are other requirements that we'll cover in this slide after this one. But for now, just keep in mind that if you want to be able to claim 100% deduction, then the vehicle has to be at least used 50% of the time for the business related purposes. If the vehicle is not used for at least 50% of the time, then you cannot take that accelerated depreciation, or you cannot take that 100% of the depreciation. You will have to use a straight line method of depreciation. That means you get to write off fixed amount every year over a period of year. The third point that we wanna cover is the deduction is always prorated. Whatever method you qualify for, whether you qualify for the accelerated or whether you qualify for the straight line. Again, your business use percentage will decide how much depreciation you are able to claim. So if the vehicle is only used 80% of the time for business, then even if you claim 100% of the depreciation in current year, only 80% of the cost is eligible for that 100% of the depreciation. Whatever that business usage percentage is, that percentage decides how much of the total cost you're able to write off. And then the fourth point, and this is very important, if you claim accelerated depreciation on a vehicle, and then in a subsequent year, the business usage falls below 50% requirement. Remember the point number one, in order for you to be able to claim the accelerated depreciation, the vehicle has to be used for at least 50% of the time in the business. If this percentage drops below 50% in subsequent year, then IRS requires you to recapture all of that accelerated depreciation, meaning you will have to calculate the depreciation using the straight line method, and any depreciation above and beyond that you claim over that straight line method, you will have to include that back as an income in the year that the business usage fell below 50%. So this is something very important to keep in mind when you claim the accelerated depreciation for a business vehicle. Now let's go over the requirements for you to be able to claim the entire cost or entire eligible cost of the vehicle in the year that you place the vehicle in service. If you have a light vehicle, like a sedan or a small SUV or a truck where the gross weight of the vehicle is under 6,000 pounds, then you do not get to claim entire cost of the business as a depreciation expense in the year that it was placed in service. You have to prorate the depreciation deduction over multiple years. The first year deduction is capped at 20,300 for 2026 tax years. Any unused basis that you have after claiming that $20,300 as a depreciation gets carried forward, and you get to write off a portion of that each year until the vehicle is fully depreciated. If the vehicle is at least 6,000 pound gross weight, so think of the trucks or big SUVs, those kind of vehicles, then in those cases you get to write off the entire eligible cost right away in the first year that you place the vehicle in service. So for example, if the vehicle was over 6,000 pound gross weight, the cost of the vehicle was say $100,000, and it was used for 80% of the time in business. That means eligible cost was $80,000. And since the vehicle met the gross weight requirement, you would be able to write off that entire $80,000 as a depreciation in the year that you place the vehicle in service for the business. And the fourth point I want you to remember is that you have to keep a log, the mileage log. Every time you drive the vehicle for business-related purposes, you have to make an entry for the date, miles driven, and also purpose of it. You can use a simple Excel file, that's perfectly fine, but you have to keep a log of all the business-related mileage that you drive for the year. Without this log, the IRS will not approve the deduction. You also have to note the beginning of the year and the end of year miles, so you can determine what your total miles were for the year. And then based on this log, you can determine how many business miles you had, so you can determine the business usage percentage as we discussed in the previous slides. So just to summarize everything that we covered, in order for you to be able to claim the depreciation for the vehicle, if you are a sole proprietor or single member LLC, or the business, if you are a C corporation or an S corporation, has to own the vehicle. The vehicle has to be placed in service during current tax year. You have to maintain a mileage log to determine the business usage percentage, and depending on the gross weight of the vehicle, you will be able to write off that entire eligible cost of the vehicle in the current year, or you'll be able to prorate it over multiple years. So in order for you to claim the deduction for that vehicle, these are the requirements that you have to follow. I hope this information was helpful to you. If you have any questions about this or any other tax related topics, I have my email address for you on the screen. Please feel free to reach out to me. I'll be more than happy to answer your questions, or at least point you in the right direction where you can get the right answers. Just keep in mind that I will not be able to give you specific tax advice, but at least can point you in the right direction. So I hope that all makes sense to you. And then until next time, take care and bye-bye.